Hey, good evening, everybody. Uneducated Economist here. So, I just kind of wanted to share a little bit of this information with you, talking about how the Federal Reserve was looking for help from the supply side of things to bring down inflation. And I knew at the time that that wasn't going to work and that they were okay with it because they were actually looking for inflation when they were looking to bring demand down. Isn't that funny to think about? Because most time when we think about the Federal Reserve and what it is that they have been doing over the last couple of years is that they have been trying to fight inflation, like trying to bring the inflationary scenario down. And now part of this idea as bringing inflation down was to hurt demand. Like if you raise interest rates, the people who would typically borrow money to use that money to go out there and buy things would then be burdened by that higher interest rate and there would be less demand. With less demand in a supply chain that was coming back online, we would have equilibrium and then inflation would, come down to what they were targeting, right? And, supposedly targeting. And now this becomes like very obscure to try and wrap your head around because the Federal Reserve was in need of inflation. Like they didn't want to bring inflation down. They wanted to get inflation elevated. Back in 2018, it was a major problem the Federal Reserve was facing was an inflation expectation that was persistently too low. Now, again, I read from this speech just about every day that I come out here, right? But it's monetary policy strategies for a low neutral interest rate world. And he says it right in there, right? Today we face an altogether different set of problems stemming from a very low neutral interest rate. That is, the short-term real interest rate consistent with an economy operating at its potential alongside low and stable inflation. Ironically, the problem we need to solve these days is the risk of inflation that is persistently too low rather than too high. So the Federal Reserve was looking for inflation that would be persistently too high, right? That was a problem they were looking to solve. A lot of people don't know that. A lot of people don't understand that the Federal Reserve was failing at their monetary policy because the neutral interest rate had dropped so low and the Fed funds rate was so close to that neutral interest rate, it was no longer capable of stimulating the economy. In fact, he addresses that. It is useful to travel back in time in 1980s and the 1990s when inflation targeting was introduced. The problem at the time was a high and variable inflation that contributed to macroeconomic instability and unmourned inflation expectations, which in turn fueled high and variable inflation. To break the vicious cycle, numerous central banks instituted inflation targeting at various variants thereof with focus on bringing inflation down to a low level and fostering the establishment of stable, well-anchored inflation expectations. This strategy worked extraordinarily well in the decade preceding the global financial crisis, as central banks were able to achieve remarkably low and stable inflation, leading to a positive feedback loop between inflation and well-anchored inflation expectations. Today, we face an altogether different set of problems. And that's where he goes into talking about how inflation expectation needs to be elevated. And that by raising the inflation expectation, they could actually get a lot of their monetary policy back. So understanding that back in 2018, leading into 2019, the Federal Reserve was in desperation looking for inflation. Just go back and read their speeches from the end of 2018. Even Ben Bernanke was talking about the fear of deflation taking place within the United States and how to prevent it from ever occurring. They're not worried about inflation, they were worried about deflation. They said that the problem they needed to solve was an inflation expectation that was persistently too low. So now something that I found very interesting is that if we fast forward into the pandemic and we saw the inflationary scenario take off, everybody was saying, look, the Federal Reserve made a mistake, they screwed up, they printed too much money, blah, blah, blah. It all went on, and the inflation expectation was incredibly elevated. Very much in line with what the Federal Reserve needed. Right? He said it right here. Inflation expectation persistently too low was the problem. So now they have an inflation expectation that is persistently high, and they want to maintain this elevated inflation expectation or an elevated inflation. Because remember, it was the problem they needed to solve was persistently too high of inflation rather than too low. Right? Again, let me read it to you one more time just to make sure it was clear. Ironically, the problem we need to solve these days is the risk of inflation that is persistently too low rather than too high. So the Federal Reserve wanted, needed, desperately looking for inflation to be higher, persistently higher, going into the future with higher inflation, not lower, higher inflation. Okay. So we go into the pandemic, and now the Federal Reserve is attempting to fight inflation because that's a bad thing, right? Everybody knows that the Fed screwed up and they don't know what they're doing and that they're, creating all these issues, right? Now, at the time, they said that they were looking for help from the supply side. And I said, wait a minute. No, you're not. You're not looking for help from the supply side. Because if you got help from the supply side, that would bring inflation down. But you don't want inflation down. You want inflation elevated. And the idea that you're going to get help from the supply side when you just magically open up the economy, all this supply is just going to come flowing back in like it had before and just reestablish itself, like as if nothing bad happened or anything like that. It didn't make any sense to me. I'm like, wait a minute. You're looking for help from the supply side when there's no demand? Like, why is supply going to, why would the entrepreneurs, why would the manufacturers, why would the distributors want to come to market when there's no demand? Like, the Federal Reserve says, hey, we're going to try and hurt demand. So come on, supply, come help us out as we hurt your customer, right? And I was like, that ain't going to work. This is what Waller had to say back in May 30th of 2022. He said all these actions, he's talking about like everything that they were doing to try and bring inflation down, raising the rates and all this other stuff. He says all these actions have a goal of bringing inflation toward the FOMC's 2% target. Increased rates and smaller balance sheet raise the cost of borrowing and thus reduces households and business demand, right? Very much like in line with what everybody would anticipate coming from a higher interest rate, right? Increased rates and a smaller balance sheet raise the cost of borrowing and thus reduces households and business demand. So they bring the demand down by raising the interest rates. On top of this, I also hope that over time supply problems resolve and help lower inflation. Now that's where I got very confused. I was like, well, wait a minute, bro. Why would you get help from the supply side? Like, I'm in the supply side industry. I do retail lumber sales for a living. I am very much aware of how the distribution network within lumber works. And I'm thinking to myself, if you are hurting the demand, why would supply come back? That doesn't make any sense. Right? And so I even made this video at the time. This is, I left a link down in the description. But what is the date on this thing? It was 2 years ago. Let me see if I have an exact date. June 2nd. So this was given May 30th, and this was June 2nd. So I made this video just a couple of days later, like literally right after Waller gave this speech, and this is what I had to say. Let me see if it's loud enough. Right? Put pressure on demand, put it down. We don't want as many people making purchases. And at the same time, they're saying, okay, supply chain, go ahead and do your thing. And the supply chain sitting over there going, we're a bunch of entrepreneurs over here. And although we know there's a bunch of stuff over here, and we know there's a bunch of people over there, but the people over there, you're telling them that you don't want them making as many purchases. So we, as entrepreneurs who know that there's a bunch of stuff over here who need to get it to the people who are wanting to purchase it, but you're telling me that you don't want them purchasing as much stuff, but you want me to invest my time, my money, my effort, my skills, my knowledge into trying getting this material, these products, this stuff to the people that you don't want purchasing it. Okay, tell me again, you want my help for what? As the supply chain side of right? So like I said, I left a link down in the description to that video. That's the video I made 2 days after Waller gave that speech, May 30th of 2022, saying you're not going to get help from the supply side. That doesn't make any sense. Now, if you need to understand that, just follow the Uneducated Economist, because he works within the lumber industry and he's well aware of how the supply side works, and that there's no demand, then there's not going to be a bunch of supply. I mean, why would you come to, like, there might be supply for a little while, but then as demand, the little demand that's there eats up that supply, you're not going to have more supply coming to market after that initial one is gone, because you don't have demand. With demand comes supply. If you increase the demand, the suppliers will supply. If there's an oversupply, not enough demand, then supply disappears. Right? And this is how it works, right? It's equilibrium, the bullwhip effect. So now, understanding that to be the case, it was no surprise that the Federal Reserve was like, we didn't get the help we were looking for, right? This is what Jerome Powell had to say just the other day. This is August of 2024. He says, good ship transitory was a crowded one with most mainstream analysts and advanced economy central bankers on board. The common expectation was that supply conditions would improve reasonably quickly and that a rapid recovery in demand would run its course. And that demand would route back from goods to services, bringing down inflation. So they were anticipating that there was going to be this huge shift in the way that people were participating within the economy, and that supply would find its way back. However, that didn't be the case. Let me see if I got it here. Okay, the improvements in supply conditions and rotation in demand from goods and services were taken much longer than expected, in part due to further COVID waves in the U.S. The COVID continued to disrupt production globally, including through new and extended lockdowns in China. So they go and blame it on that. But honestly, I was calling it out before all that happened. Okay? Saying that you're not going to get the help from the supply side, and if you want to use any other excuses like they do, that's fine. But I was calling it out the day after they were trying to make the announcement that they were looking for help from the supply side. I'm like, yo, wait a minute, you better listen up here, because that ain't going to work. Right? And here, 2 years later, they were like, we didn't get the help we were looking for from the supply side. That was weird. We were really anticipating that. That was odd. Right? And no, it wasn't. They knew that it wasn't going to come back. Like, if I could call it out back then, 2 days after they were a speech that was given saying that, hey, we're looking for help from the supply side. And I'm like, no, that ain't going to work. And besides, you're not even looking for help from the supply side because you want persistently high inflation. And so with the idea that you want persistently high inflation and thinking that I'm going to get help from the supply side, which you know you weren't going to get, was actually very much in line with what it is that you were wanting, which is a persistently high inflation expectation. So it worked, right? Everybody says the Federal Reserve screwed up. They were anticipating that there was going to be a return from the supply side and that would bring inflation down. They failed at that belief. That is exactly what they want you to think. That is exactly what the Federal Reserve would want you to think, because that keeps the inflation expectation elevated, which is what they want. All right? Again, if they said, hey, we are looking for help from the supply side, and I jump up that day and say, no, that ain't going to work. That isn't going to work. You can't do that. Don't expect it. It's not going to happen. And then here it is 2 years later, they're going, we were really hoping for help from the supply side and we didn't get it. That was weird. And I'm like, no, that's not weird. That is very much what you should have expected coming from the supply side when you raise rates and say that I'm going to hurt demand, is that they're not going to come back, not in a meaningful way. And so here they are kind of questioning that. They're like, that's really strange. That's really odd that took place. I mean, we were really anticipating that we were going to get help. And I'm thinking, well, you should have watched The Uneducated Economist, because he would have explained it to you that you weren't going to get the help and that it wasn't going to work. And I mean, not trying to like toot my own horn or brag myself up, but I'm the only one who said it. right? I mean, and I put it out in a video that's right there for you guys to go and check out the day after they were trying to say it. You know, it was like, no, that ain't, you can't do that. Don't anticipate help from the supply side, because the supply side isn't going to come to a customer that's being hurt, right? When you're trying to punish the demand side of things. So, anyway, I left those links down in the description for you guys. I thought that was, very much, the understanding of what it is that the Federal Reserve is trying to do with inflation is probably one of the most difficult things for people to wrap their heads around when it comes to the monetary policy. Is probably everybody has misunderstood it. They don't get it. They think that the Federal Reserve failed at everything that they are doing, that they do not have control over this inflationary thing, right? Everybody is like, sure that they're like right at the very edge of collapse. And the entire time I'm laughing at this because in their own communications, they said that they needed a persistently high inflation expectation. They needed persistently high inflation that was persistently high rather than too low. And I'm thinking, wow, at the time I read this, I'm thinking, how in the world are you going to do that, bro? Like you went and did quantitative easing of 1, 2, 3, and 4, which took the Fed's balance sheet from $850 billion to over $4.5 trillion with the anticipation that you were going to get an inflationary scenario on account of it, and didn't at all. Failed to achieve the 2% target even. Right? $850 billion to $4.5 trillion through the quantitative easing program failed to produce an inflationary scenario. That is what John Williams was scared about back in 2018. It was like, quantitative easing didn't work back then. We need to get an inflation expectation that is persistently too high to make up for the fact that we failed to have an inflation expectation that reached the 2% target. And people they misunderstand that one as well. That the Federal Reserve is no longer going for a 2% target, but going for 2% average inflation rate over time. And it's so amusing because I cannot find literally nobody out there who communicates flexible average inflation targeting except the Federal Reserve in their speeches and the Uneducated Economist. Nobody else seems to talk about flexible average inflation targeting. I don't get it. I don't know why. It's right there. They're communicating it. They're telling you. Here, let me bring it up again. Let me show you. This is coming from what is it? The Makeup Strategies. Here we go. Makeup Strategies of 2022. 2020. This is a Federal Reserve document talking about, this is Finance and Economics Discussion Series, Division of Research and Statistics and Monetary Affairs, Federal Reserve Board, Washington, D.C. How robust are makeup strategies to key alternative assumptions? Now, in this, all right. What's the abstract? Let me read the abstract on this thing, because this is good stuff. I mean, it's hard to get through it all because most people have a hard time like wrapping their head around monetary policy. They're like maybe just too intertwined with politics or something else that's going on out there. But to understand that the Federal Reserve conducts a monetary policy that is different from fiscal policy, which is the government and their actions out there. Says we analyze the robustness of the makeup strategy policies that aim to offset, at least in part, past misses from inflation from its objective to alternative modeling assumptions with an emphasis on the role of inflation expectations. We survey empirical evidence on the behavior of the shorter run and long run inflation expectations using simulations from the Federal Reserve Bank and U.S. macroeconomics models. We find that the makeup strategies can moderately offset the real effects of adverse economic shocks, even when much of the public are uninformed about the monetary strategy. We also discussed the robustness of makeup strategies to alternative assumptions about the slope of the Phillips curve and the misperceptions of economic slack. So in this, they break down the idea of what it is that the Federal Reserve is attempting to do. Now, let me read this part right here. I'm not going to go too deep into it. I just want to kind of get this little bit. Makeup strategies work best when the public understands, believes, and reacts to the policymakers' commitment to offset misses in the inflation from the 2% objective in the future. In particular, makeup strategies are most powerful when policymakers can influence the public's inflation expectations. Right? Remember, it's all about your idea of what it is that's coming. If they can hold your perception, they got the monetary policy. And let me read that again. In particular, makeup strategies are most powerful, right? Most powerful policymakers can influence the public's inflation expectations. Nothing else, just your expectations, your perception of what's coming into the future. It's most powerful if they can control that part of it. In doing so, policymakers face a dynamic tension. They must maintain long-run inflation expectations around 2%. This is important. This is why you hear so much about the 2% target, why it's more important about you to hear why the Federal Reserve makes sure that it's communicated out there in a way through the propagandized mainstream media that you believe that there is a 2% target. This is very important for their monetary policy because it's part of locking in and anchoring in the long-term inflation expectations, but that's the long-term inflation expectations. Let me read it again. In doing so, policymakers face a dynamic tension. They must maintain long-run inflation expectations around the 2% objective, while at the same time moving shorter-run inflation expectations in response to the new strategy. This is important to remember, right? Because they got the inflation expectation at 2% over the long run, but now they're talking about moving it away from the 2% target. This is part of their strategy. And not too many people are aware of this. Everybody thinks that they're trying to go for a 2% target. They're just admitting it right here that they're going to be moving away from it. Right? Let me read it again. They must maintain long-run inflation expectations around 2% objective, while at the same time moving shorter-run inflation expectations in response to the new strategy. Given the centrality of these expectations, our paper begins by surveying some empirical evidence. Measure of long-run inflation expectations appear to be well anchored. However, recent evidence from survey also suggests that the long-run inflation expectations respond to persistent changes in realized inflation and could therefore become unanchored if the current low inflation environment persists. Now, again, this is talking about making up from the fact that they failed to achieve the 2% target. They knew it. They were like, man, we have screwed up. We got to figure something out, right? So let me read that again. However, recent evidence from survey also suggests that long-run inflation expectations respond to persistent changes. There's persistent changes in the realized inflation and could therefore become unanchored if the current low inflation environment persists. So if people believe that there is too low of inflation, or if there's a low inflation, there's no inflation, the Fed should be printing money kind of scenario, if they believe in that and it was persistent, then it would actually unanchor the 2% long-term inflation target. Right? Remember, short-term inflation expectation is everything about locking in the long-term inflation. On the short-run inflation expectations, a body of research has documented that these expectations seem to react to new information more slowly and to a lesser extent than assumed in most theoretical models. Goes on to say this: informed by these empirical findings, we examine how makeup strategies with an emphasis on the average inflation targeting, as in the companion paper, perform in the variance of the Federal Reserve Bank U.S. macroeconomic model under various assumptions about the expectations formations. Okay, very complicated stuff. Reading through Fed stuff is like one of the most difficult things in the entire world. It is very complicated stuff, and they do not word it in a way that is like, easy to just like, retain. But going through this stuff, you will find and you will hear about how it is that the Federal Reserve was failing to achieve that 2% target, and everything within their, and let me see if I can find, this spot. Everything within their attempts here was to try and make up for the fact that they failed to achieve that 2% target. Right? Um, let me see here. We also examine the risk that adoption of the makeup strategy, which aims to influence short-run inflation expectations, could inadvertently unanchor long-run inflation expectations. In particular, a commitment to persistently overshoot the 2% inflation objective could lead to an increase in long-run inflation expectations and result in a longer period of inflation above 2% than intended. Boom, right? They wanted it above 2% for a while, but they thought, man, they knew, like in this model, that if they were to have an inflation expectation that was persistently too high, that it could unanchor the long-term inflation goal, or long-term inflation expectations, which is the 2% target over the long term. This risk particularly salient for asymmetric variance of the average inflation targeting rule, under which policymakers do not react to average inflation above 2%. So this is like, again, people think about the 2% target, but yet the makeup strategy here is saying something very different. They're allowing inflation to run extra hot, extra long for an extended period of time, so long as it doesn't get overheated and unanchor the long-term inflation expectation. The short-term inflation can run hot so long as you got the long-term anchored. If that's anchored, we're cool, right? So the short-term can do makeup for the fact that you failed to achieve the 2% target. So these are the type of stuff that I go through, right? This is the reason why I'm able to come up with, what ends up happening when you read through and you read this part, average inflation targeting, whereby the central bank purposefully aims to achieve an above target inflation during good times, when the lower bound is not constrained. Properly designed and implemented, such an overshoot can offset the inflation undershoot during bad times so that the long run average inflation rate and inflation expectations are in line with the target. See, all this stuff sounds like they were trying to control the elevated inflation expectation for their advantage, which is what they needed. Everybody else is going like, whoa, they screwed up. They don't see anything else but this 2% target. And, it's unfortunate that that's what they suffered through, because they could really, try and adjust that inflation target to other places if they really wanted to, which they do. See, people don't think they do that, but they do. They do that. Right? It's just nobody understands it and nobody pays attention to it. There was another, what I thought was another, maybe I have it in a different spot. Hold on one second here. Let me see if I can find it in here. Oh, sorry guys, I'm got my documents all messed up here, so I'm not sure where everything is at. So, anyway. Nope, I can't find it. Oh, sorry guys. I thought I should actually have this stuff set differently. Like I've said it before, so I can just have it like instant, like open up one folder and have like all these things already automatically just ready to go. So anyhow, the Federal Reserve needs this expectation to be elevated in the sense that they need to raise the interest rates. And that was something that a lot of people just don't understand when it comes to their monetary policy, is that raising interest rates is how they are able to get their ammunition back. Now you think about it, when the Federal Reserve goes to try and deal with economic shocks, it's dropping of the Fed funds rates that stimulates the economy. A lot of people think it's all this money printing and stuff like that. It's not. It's the lowering of interest rates. The only problem with the lowering of interest rates now is that the neutral interest rate, which is the rate that neither accommodates nor restricts the economy, it's neutral. This neutral interest rate over the years has fallen dramatically, and now it's very close to zero. So when the Federal Reserve goes to stimulate the economy, they can't do it. They drop interest rates to zero, and it's not far enough below the neutral interest rate to actually add any kind of real stimulus to the economy with those lowering of rates. Because again, you got to get below the neutral rate far enough to stimulate the economy. Part of this, when I was reading through this, during the great financial crisis, the neutral interest rate had fallen so low, so close to zero when they hit the lower bound, that there was estimates that they would have had to take interest rates negative like 6% on the Fed funds rate, and negative 6% in order to have any kind of real stimulating effect through the interest rate adjustments. They knew that failed. That was not going to work. Like, they were at zero interest rate policy, and they were screwed. Interest rate adjustments didn't work. However, they had the printing press, and they had the idea of expansion of money, and they put out the belief that there was going to be a hyperinflation scenario coming into the future, and people believed it. I was one of them. I know. I thought that the dollar was done. It was good. I dumped all my money into silver, believing that we were going into a hyperinflation scenario. And in 2011, I thought I was one of the smartest people in the entire world for doing it. Only to find that the entire hyperinflation scenario that everybody was anticipating and knew was going to come from a quadrupling of the balance sheet didn't happen. It never materialized. And in fact, it never really even got above 2% for the most part. I mean, it did a little bit, but not really. And so the Federal Reserve had zero interest rate policy that failed to produce an inflationary scenario. At the same time, they took their balance sheet from 850 billion to 4.5 trillion and still failed to produce the inflationary scenario. They were failing big time. And so understanding that they needed something very different from what it is that all the rest of the people out there in the world seems to understand about the Federal Reserve, and that is that the monetary policy that everybody knew, the interest rate adjustments and the money printing and all that other stuff, could be talked about. And that's really how the Federal Reserve now conducts themselves, is by controlling the narrative, by controlling the people's belief out there of what it is that's coming into the future. And by understanding that they use their forward guidance, their words, their jawboning, you can see that even through the mainstream media, that they're pushing the idea. Like, here it is, Powell, from August 27th of 2020, right? And straight up tells the people, right? Tells the people straight up this. Says, we have also made important changes with regard to the price stability side of our mandate. Changes. Our long-run goal continues to be inflation of 2%. Our statement emphasizes that our actions to achieve both sides of our dual mandate will be most effective if the long-term inflation expectations remain anchored at 2%. That's their goal. Everything has to do about long-term inflation expectations. Right? However, if inflation runs below 2% following economic downturns but never moves above 2% even when the economy is strong, then over time inflation will average less than 2%. Households and businesses will come to expect this result, meaning that inflation expectations would tend to move below our inflation goal and pull realized inflation down. This is a problem. This is the problem that they were facing. Think about it. Talking about that problem back here in 2018. Ben Bernanke was talking about it back in early 2000. They were still talking about it in August of 2020. To prevent this outcome and adverse dynamics that could ensue, our new statement indicates that we will seek to achieve inflation that averages 2% over time. Therefore, following periods when inflation has been running below 2%, appropriate monetary policy will likely aim to achieve inflation moderately above 2% for some time. In seeking to achieve inflation that averages 2% over time, we are not tying ourselves to a particular mathematical formula that defines the average. Thus, our approach could be viewed as flexible form of average inflation targeting. Our decision about appropriate monetary policy will continue to reflect a broad array of considerations. It will not be dictated by any formula. Right? See, everything that's going on right now within the Federal Reserve was very well orchestrated and dealt with from years ago. Before the scenario happened, before the inflationary scenario took place, they were very well aware of what it is that they needed in order to save their monetary policy. And with an elevated inflation expectation that was running persistently through the economy, with no other understanding of what was happening, the Federal Reserve was able to achieve what it was that they needed to get their ammo back. What I find most interesting about it is how much mainstream media communication was done for the 2% target, and how it is that the Federal Reserve doesn't see anything other than a 2% target. And it was communication after communication of that. Go and punch 2% target into any video search engine, and you will find countless amounts of people who will all talk about how it is the Federal Reserve goes for a 2% target and doesn't see anything other than a 2% target, and that they made up this 2% target. It's completely arbitrary, and how it is that they couldn't possibly see anything other than a 2% target, and this is the problem that the Federal Reserve is facing. Now, what I find very amusing about that is if you go and search for it, you will find it all over the place. It is not accurate. That's not what the Federal Reserve is doing. Now, go and search up flexible average inflation targeting and look at all the videos that people are talking about how it is that the Federal Reserve is actually going for an average of 2% over time, and that they're not actually achieving a 2% target, but that they adjust inflation or adjust the monetary policy with a make-up strategy, which means at times they may be above or below the 2% target in order to achieve their long-run goal. All right? Now, nobody, not a single person out there is talking about that, except for the uneducated economist, who will not let it go, right? Who is persistently out there communicating that way different from everybody else and way out on a limb while doing it. Everybody else is regurgitating the exact same information over and over again. But this information that I am presenting to you is the only place that you're going to find it unless you are going and reading it through the Fed documents themselves. Nobody else talks about it. Flexible average inflation targeting is not something that is considered by any financial advisor out there. They're not communicated through the government. They're not corrected by the Federal Reserve. And the Federal Reserve doesn't correct people when they say, hey, you're going for a 2% target. They're like, oh, well, yeah, 2% over time. That's right. We're trying to get it over the long run goal. And don't correct the fact that they are doing it over a 2% long-term expectations, and that the short term may not have inflation running at 2%, but could be above or below that. And here it is, they're achieving their goal perfectly. And to me, it's really obvious on why it is that they're doing it this way. Everybody else is really confused by the Federal Reserve. Not me. I'm not confused by it. I knew back in the day when they were like, hey, we're going to get help from the supply side to bring inflation down. And I'm like, no, you're not. That's not true. You guys don't want inflation to come down, first of all, and you're not going to get help from the supply side. Right? Those were two things that were stated by the Federal Reserve that I straight up in a video right here on YouTube, and I left the link down in the description for you, that said, no, that's not right. And they knew it wasn't right. And here it is 2 years later. They're like, we didn't get help from the supply side like we thought we were. That was weird. Everybody thought we were going to get help from the supply side, and that was going to be transitory inflation. And I'm the only one going, no, you didn't. No, you weren't. It was like 2 days after they made the statement about it. Here I am putting a video out warning people saying, don't believe this stuff. Don't believe the Federal Reserve is going to get help from the supply side. They don't. They're not. They don't believe that. They are going to look for a way to get persistently high inflation because that's what they need. And the fact that the supply chain did not come back in a meaningful way to bring demand back in line with the supply side, to bring equilibrium to the market, when it didn't work out, they were confused. They were like, oh, that didn't work. Everybody thought that that was going to happen. Everybody? I mean, I don't think so, Jerome. Not everybody. The uneducated economist had no belief, not the moment that you said it, did he have a single bit of belief that you were going to get help from the supply side to bring inflation down in a meaningful way. In fact, it was going to be exact opposite, and you were going to have persistently high inflation, and you were going to be questioning that on how that happened, and yet that is exactly the strategy in which that you need to save your monetary policy. Mm-hmm. To me, it's clear. Like, I know a lot of people are like, dude, you just talk in circles. It's not, right? The Federal Reserve has communicated things to you, leading you to believe in a particular direction so that they could save their monetary policy. It's called forward guidance, jawbone, and credible threats. And when you recognize them, when you see them for what they are and how it is that they are deploying the strategy, it makes perfect sense. Everybody, All right, let's cruise down here and read some comments. I've been just going off. Knowledge is power. The rich get the knowledge and use it. Drone that carries and sprays fentanyl. All right, what are you guys talking about? They think they can control chaos, and the chaos one day will consume them. BIS Gold is tier 1 asset, same as Treasury risk-free asset. Expenses can be expensive cans to kick again. Chat. All right, using their currency, they pray for 4%, but actually 5%. Core inflation is closer to 4% than 2%. You mean they lied? I don't think they lied. They didn't lie. This is a strategy. It's part of their communication. They didn't lie. They didn't lie about anything. People believed them, and they didn't correct it, so they gaslit. All right? Is gaslighting lying? Yeah, okay, fine. Then they lied. No, they didn't lie. Everybody just seems to believe it. Like, even in the 60 Minutes interview, the interviewer straight up said, when you get inflation down to 2%, you're going to lower rates, right? And Jerome Powell said, no, that's not what we said. We're going for 2% over the long run. Like, he straight up corrected him, and nobody heard it. Nobody heard it. Like, literally, I was the only one who said, no, man, he didn't say that. He just, he corrected the guy and told him that he was not going for a 2% target, but going for a long run. And everybody misunderstood that communication. They totally missed it. Right? But they didn't lie. They gaslight. They allow you to believe. Think about all the, I'm reading how, like, Time Magazine, USA Today, like, all these articles that I'm, like, not that USA Today is any great, or even Time Magazine, but all I guess I'm getting at is that they're fairly known publications who put out articles talking about the 2% target from the Federal Reserve and how it is that the Federal Reserve doesn't see anything other than a 2% target and where this 2% target came from. And I'm thinking this article is inaccurate. This is not what the Federal Reserve is doing. This is not their goals. This is not all of this entire article is inaccurate. Like, everything in it, like, it's a Time Magazine article, and if there was somebody who was to read this thing, they would have taken this into consideration as reality and truth. It is not, right? But because the Federal Reserve doesn't come out and say, hey, man, that Time Magazine articles, you might want to correct that. We're not going for a 2% target. We're actually going for a 2% average inflation rate over time, would screw up the credible threats that they are using in order to guide their monetary policy. They do not want to correct the people's belief. They want to control their beliefs. Yeah. They want to control that. And it's really apparent when you see them coming out at the end of last year with a dot plot that said that there was going to be 7 rate cuts coming this year, and everybody started to position themselves as if those rate cuts had already happened. Now, people hardly even remember that. People hardly remember that there was so much communication just 9 months ago, talking about all these future rate cuts that were coming, and that the dot plot was like set in stone that the Fed had committed themselves to. And again, I was one of the few people out there going, no, that is not a commitment to the future. That is not anything as far as a monetary policy plan. That doesn't have anything to do with the future rate cuts. But yet everybody looked at that and started positioning themselves on account of that. Now, I've proven through many videos and documents showing how it is that the Federal Reserve has built up this communication style. There's so much, so much work that was done prior to this day that we are in that led up to the ability for the Federal Reserve to communicate this stuff out there. They've worked very hard to build up these different channels in order to get it out there in the different directions. If they want to communicate it out there to a group of people who would receive the information, they cannot do that for everybody because certain groups will receive the information differently than the other people will. So they have developed ways of communicating this stuff, the whatever narrative it is that they want the public to understand and believe. They figured out a way to communicate this through many different channels out there. And again, this isn't me making this stuff up. This is their own words. This is their own documents that are saying this. I'm going to lose 10 pounds over time, so don't worry while I eat this ice cream. Fiat script will be confiscation, the gold currency in 1933 for the new digital CBDC. They want to own the prices. A lot of trolls in here tonight. Yeah, oh well. Alright, they buy all wholesale. See, this is the reason why I don't really to be honest, I like the membership only chats, right? Because that community is actually wanting to understand. They're sharing their thoughts and ideas and opinions, and it's not just a matter of just a bunch of trolls, trying to be funny or whatever it is. They're actually serious about it. And we break down this stuff in a way that you guys can understand it as well. The membership only videos are quality. Like, it's quality content to be had. And as far as somebody like me who is doing this so that I could get a better understanding of what's going on within the economy, going to a place like the videos that I do for the members only and getting that information is unlike any place else you're going to get it. Like, unless you're reading these speeches and breaking it down yourself, I don't know anybody else who's doing it. I don't know anybody else who's combining them in the way that I have done. I mean, it's very unique to what I feel is this channel and my research and what I have done. And I believe that it's probably due to the fact that I'm a working class individual who has a real passion for trying to break this stuff and understand it for what it really is. I don't have any plans on, making millions of billions of dollars or whatever doing this stuff. I just truly want to understand what's up. Let's cruise down to the bottom. Let's see what's down here. All right. He likes membership only chats because it puts money in his pocket. Let's just be honest. Okay. So let's think about what it is that really puts money in my pocket. That would be sponsorships, bro. Okay. Do you think asking people for $1 a month and having 40 people joining the members chat is somehow going to make me rich? I mean, is that really what you think, brother? I mean, come on, man. Let's be honest here. If I really wanted to make some money, I'd be doing a sponsorship right now. In fact, I'd be doing 3 of them. All right? That's what I would be doing if I really wanted the money. If I really wanted money off of the membership, I would have charged $10, $50 a member, not a buck. You think I'm going to get rich making $1 off of memberships? Is that honestly what you think? I mean, we're being honest, right? Why are you here? Yeah, go find another place to be, man. Go find this information someplace else. All right, you've helped me out, bro, for sure. I apologize for being a jokey jokester. That's all right, man. You can joke. I don't care. I mean, it's just like, being funny. I mean, all right. Yeah, they pay $1 a month, right? $1 a month, he's really getting rich, right? I mean, that's the whole point. The only reason why I even set up the membership is so that I could have that group. That group that says, hey man, I'm serious about this stuff. I really want to understand it. I really want to have a community that I can break this stuff down and do this. Okay. Hey man, let's separate us right here. A little tiny paywall is all it takes, and it's $1. Right? That's tough, huh? That's tough to come up with. Yeah. Today, saying anything someone else doesn't like equals trolling. That's what I hear from almost everyone now. Trolling is trying to get certain response from someone. Ads, and more ads. Hey, it's the only way I can do it. You don't like the ads, then go and download premium or something. Pay for it. You know, I mean, I make money off of the ads, off of the ad revenue. I don't make money off of the sponsorship. How would you like it if you downloaded YouTube Premium and then I was doing commercials right in the middle of that, right? Like, I don't come out here in the attempts to make all kinds of profit and money off of it. I'm coming out here because I truly love this topic. I really love making these videos. I love coming out and having these discussions. This is truly what I enjoy doing. Right? And I would love to do it in a grand scale and in many ways. But honestly, it doesn't matter how much money I really make at it. To be able to pay my bills is really the coolest thing in the world for me. So whatever it is that comes from it comes. I have very little expectations from it all. And yeah, ad revenue is the only way I'm making money off of it. And a small amount of memberships, right? You know, it's not like none of that's going to make me rich. Simon doesn't control the ads or the amount of them. That's right, I don't. I mean, I guess I do control it in a sense that I do the like mid-roll ads. Like I can say whether or not to have mid-roll ads. And in that sense, then yeah, I mean, I guess I can control the ads, but I don't control how many there are. I don't control what they are. I don't control, where they go or anything else like that. Like I can either say yes or no to it, right? So I say yes. The dollar is worth it. You can't find cheaper explanations. That's right, Big Hill. Thank you. And then not to mention, like how many membership only videos have we done now? Like lots of them. For a dollar, you have access to all those membership only videos that I have done, which are very deep discussions on all this stuff, like talking about the Fed's Basel Endgame and how they feel about that, and the tailoring of the banks here in order to conduct, business in a global scale. Like this is something that not a lot of people are discussing out there. We discussed it. We discussed it in membership only videos. We talk about monetary policy. We're talking about just recently we talked about the interlinking of faster payment systems globally, right? This is stuff that the Federal Reserve is discussing right now. But, I mean, maybe that's not important. I don't know. Maybe that's not important to you. To me, it's important because, like, once I hear something coming in the future, I'd be like, hey, the Fed already discussed some of this stuff, right? And we talked about it, and so it's not a surprise to us when it occurs. Y'all good, beloved. Simon, you're all right, man. Thank you, Ken. I appreciate you, man. All right, thanks for being here and typing comments. Yeah, thank you all night for being here and doing the moderation for the channel. Is starting a business the fastest lane to becoming a more advanced capitalist? Well, I mean, I think it could be. And I mean, I think it's everybody's individual, it's their individual talents, understandings, knowledge, expectations. I mean, is it a business? Who knows, man? Maybe it's investments in something. Maybe it's your own skills that are doing. I don't know. Everybody's different. Everybody's unique. And so you have to figure out what that is for yourself. That's again, like, understanding macroeconomics isn't something that is the same for everybody. Like you have your own economy, right? I have my economy. All-Nighter has his economy. Everybody has their own unique individual economy that is different from everybody else's. I mean, were you a drunk ass loser at 40 years old like I was? I mean, probably not. Like, I mean, maybe you were. I have a different set of dealings with than most people had to deal with. I had foreclosure in my life. I had, lots of debts and all this other stuff. Many people have way more issues than I did. Their economy is far worse than mine. Some people might have born into a family business and been working that business their entire life. They don't play the same game that we play. Everybody's doing it differently, way differently. So maybe it's a business you need to start. Maybe it's a rental income you need to buy. Who knows? But you know deep down inside what you need to do. All right. Law shall be passed in the U.S. that you must be branded by laser with the barcode Omni to go into stores and buy food. Okay. Bro, don't even read negative comments. I can. I mean, you got to read all the comments in order to see if it's a positive or negative one. So, honest question, can Can someone learn to make more money from being a member, trading, etc.? Runnison, okay. If you want to make more money, then you have to stop resisting the money in your life. Like, it doesn't, like, it's not, money is just like anything else out there. Everything carries energy within it, right? You carry energy. This Gatorade right here has, Gatorade needs a lid put on it. This Gatorade has energy on it, in it. And everything has energy to it. And we feel this energy with positive and negative, you know, vibrations that are amongst it. And so understanding that everything carries a vibration to it and everything is a matter of energy, then how it is that you are thinking and feeling about that particular thing means whether or not it's going to come into your life. So a lot of times people are like, hey man, I need this information to make a bunch of money with. And I'm thinking, okay, well, you're putting up the resistance already by saying I have an expectation that this information is going to lead me to money, right? Now, you could have the expectation that this information is going to help me understand what it is that I need to do in order to achieve the things in my life that I'm looking for. It's a very much different way of looking at it. I need this information to provide me with the money, right? So I now have an expectation that on the external, that once I have this information, then I should be able to use it to make all this money with, right? And it doesn't work like that. That's not the way, like, nothing in life works that way. If you want to have money come into your life, then what you have to do is you have to stop the resistance of money, which I know is very weird for a lot of people to hear, but it literally, you are meant to be in a world of abundance and money is part of that. Money is just a tool. It's not really anything. Like some people are like, oh no, $1 million lot. Well, $1 million might mean something to one person more than it means something to another, right? And when somebody says, oh no, it means a lot, well, that's your expectations that you are trying to put into somebody else and have them believe that $1 million means something. It's all about what you give it, right? The meaning that you have given that thing. And so when you think about what it is that you have done in your life that is now building up the resistance to that money, like why is it that you are resisting the money? I think about it. Here's an example of it. I resist the money in my life because I don't take the sponsorships. All right. So here it is. I'm trying to figure out ways that I could better my family, better my income, better my cash flow, do all this other stuff. And here, every single day, I open up my email and there is offer after offer after offer of people wanting to put money in my pocket to talk about their product for 30 seconds. Every single day. And I say to myself, nah, man, I don't like that sponsorship thing. Nah, I want to get my money through other ways, right? People don't like the sponsorship. They don't like the ads. They don't like all this stuff. I don't want to get all that money this way because people don't like it. What in the hell? Really? Is my ego that big that I resist money coming into my life because I don't like the way it's coming? Like I'm literally building up this sort of resistance because of the negative feeling I have from it. This is what in the world? This doesn't make any sense. People go out there every single day, bust their ass, bleed from their knuckles every day to try and earn some money. And I'm thinking to myself, no, I don't want to earn it that way. Like, how egotistical can that be? But yet, here it is. And I'm experiencing that right now. And it's something that I struggle with. Saying, yeah, I would love to take those sponsors. I would love to take that sponsorship. I would love to be making $10,000, $20,000 a week, you know, doing 30-second ads every couple of times on a video or something of that nature. I would love to be in that position doing it. I can see it. I could be doing it. Right? Could do it all day long, making that stuff, but I don't do it. I build up that resistance. And now when I do that, I find that I actually end up resisting money in other ways as well. Because I won't take this, I end up putting this blockage up. I built up this resistance, this wall out there. This is me personally. Even though I have cash flow coming from other ways, I don't take advantage of the big cash flow. Like I screw around with petty little stuff. Here, why don't you buy a Cantillon on Amazon? Here, go buy the book off of Amazon, yo. Right? Here, maybe I can make a 50 cents. And commissions. If you buy this book, maybe go and buy something more expensive. I'll make commissions off of that too. You think I'm going to get rich doing that? Hell no. Of course not. So stop resisting it. Allow yourself to open it up, man. Allow it to happen. Think about the energy that you had playing with the dog. This is exactly the same energy, no matter how you look at it, no matter what it is, man. Whether if it's money, then it's money. But think about the energy you have with the dog, man. You play with the dog, you're interacting with the dog. Dog's cool, just happens to be in the presence. You and the dog get along great, right? But what happens when you run from the dog? Right? The dog will chase you. The dog wants to be part of it. Right? He wants to be part of the game. What happens when you chase the dog? The dog runs. The dog will run away from you. Right? What happens when you leave the dog alone? Right? And you don't give it any attention. The dog's like, hey, what's up? What's going on? Right? Play with me. Very much like those sponsorships. Hey, what's going on, dude? And I'm like, hey, man, I can't deal with like this no more, right? You see this energy that is being created. I did it right here, right in front of myself with this damn sponsorship thing. And here it is. I built up all this resistance towards it. Why do it? All right, let it go. Maybe I should let it go and start doing the sponsorships so that I can make the money. I mean, why not, right? Go and get it while you can. Now, I think about what it is that I'm trying to do with my life, and I'm thinking it's not to take sponsorships. Like, that's not what I am intending here. What I am intending to do is to learn as much as I can and share this information, and by doing that, the natural results will be a flow of abundance that comes to me. And when I think about what it is that I have going on in my life, and I think, man, out of all the stuff that I've had going, all the failures and all the other stuff, I look at my position right now and I think to myself, man, you can pay your bills. You pay your bills on time. You can pay your bills. That's pretty cool, right? I mean, before you couldn't do that. So having the ability to pay your bills, there was a time in my life, that's the only thing I wanted. I didn't care about anything else. I didn't care about a new car. I didn't care about anything else. The only thing I wanted was to be able to get through the month and pay my bills. That was important to me. The money wasn't important. It never has been. I mean, even today, I don't think about like, I do think about like maybe having a bunch of money so that I could maybe travel or do something with, but I don't look at it like, man, I can't wait to have all this money so I can have luxury cars and boats and travel and all this stuff. Like, that's not even in my realms of thinking. I don't process like that. Yeah. And so you let go of the things that it is that you really want in life, like money or relationships or business. You let go of all that stuff. Just let go of it. Just like, man, if it's there, it's there. If it's not, it's not. It doesn't matter. I'm going to do the things in my life that go down that path. I'm going to enjoy the experience of it. Starting a business, maybe it'll make $1 million, maybe it won't, but I'm going to enjoy doing the process of building this business, building up this channel, building up a stock portfolio, building up rental incomes, building up relationships and networks, building everything. Everything is built. Everything is pieced together little bits by bit, right? And you build it up. And once you have it built, it doesn't seem so important to you anymore. It doesn't seem like, there might be people out there who look at my channel and go like, dude, 144,000 subscribers, man. I would love to have 144,000. What's it like to have 144,000 subscribers? And I don't know. It's like, cool. I don't know. I never thought about what it would be like to have 144,000. I never thought that it would ever be here. I didn't think about what it would be like. I didn't fantasize about having 144,000 subscribers. It wasn't part of like anything that I had going on. I just wanted to put videos out and share my ideas and create a journal and go that route. And when it started catching on, I thought, man, that was pretty cool. And I didn't know, like, the feeling that I had at the time was exciting. I'm like, wow, look at this thing go. Look at it go, But I didn't think, man, one day when I'm at 100,000, it's going to be like this, and I'm going to feel this way, and I'm going to drive these cars, and I'm going to have all, like, that didn't exist. Like, none of that stuff existed. All right, Super Chat. Let's go check these out. We got Barth Barther with the 10. I'm not sure what the pen is. What is that? I'm not sure where the pen is. All right. Hello, UE. The business owners in Bolivia. Oh, maybe that's where it is. Are protesting because they are in desperate need of US dollars and petroleum. They are marching peacefully today, but it is expected to become violent. And they are looking for US dollars, right? Because they are in desperate need of US dollars. You think about it, like most nations, most corporations, they deal with other nations outside of the United States in dollars or outside of their own nation in dollars. So if they have a shortage of dollars in their nation, well, they may have a very big shortage in the ability to then do business outside of their nation. And when they started getting desperate for those dollars, right, they start marching and getting pissed. It's not a surprise. And thanks for the reporting on that. I appreciate you, man. All right, Larry Bird, happy birthday, bro. September 2nd. Me, you got the same birthday. I'm July 27th, man. All right. But I appreciate the $5. All right. Joshua, $20. Thank you so much, man. Very generous of you. Here's to you, old amigo, for all the good times. Well, thank you so much, Joshua. I appreciate that $20. Very kind of you. Let's go back to the chats here. All right, you damn right. It's pretty cool. Oh, sorry. Is that a 420 joke? I am still figuring out IRAs and things like that. I'm glad I'm young, but I need to figure this stuff out. Well, Madcap, you're doing it, man. You got to do it one little bit at a time. Man. It's not like you're not going to figure it out overnight, and taking it a piece at a time. It's just like literally one little bit. When I first started studying economics, like I'm watching the great financial crisis kicking in. I'm losing my job. I'm losing stuff. I'm like, what in the hell is happening here? So I'm on CNBC, right? I'm watching the news and I'm watching these talking heads and they're babbling off, and I have no clue about what they are talking about. Like none. Like I understand the words that they're using, like I understand the definitions of them, but I cannot make clear of what the hell that they are trying to talk about. And so at one point, I'm sitting there and I'm just listening. I'm figuring, okay, well, I'm going to force myself to understand. I'm going to sit right here in front of this TV. I'm going to listen all day, and I'm not gonna deviate from it. I'm going to pay attention and I'm going to learn this stuff. And I would sit there for days and days and days and listening and still have no clue what the hell they were talking about. And one day, as I'm sitting there listening and I hear them talk about mortgage-backed securities, MBSs, and I was like, click, and I turned off the TV and I went over to my computer and I typed in, what is a mortgage-backed security? Right? Started reading up on mortgage-backed securities. I was just like, okay. So once I kind of learned what a mortgage-backed security was, like, a jumble of securities going into a, singular investment that somebody could buy. It's like, okay, I kind of understand mortgage-backed securities. So I went back over to the TV, turned it back on, sitting there watching again, and they said credit default swaps. And I'm like, click. What's a credit default swap? Right. And that's how I literally started doing research every day on the internet. What's fractional reserve banking? What's Fed funds rate? What is? And I just did that every single day. And so I started like listening to a lot of economists out there. I didn't care who they were or what they were saying. It didn't matter to me. I didn't care if they had a conservative thought or a liberal thought or anything else. I didn't care. As long as they were talking economics, I was listening because I figured there was a little bit of truth in there or a nugget of truth or something that I could use. And so I just took it all in for what it was, right? And just that face value and just took what I could out of it. And as the years went on, I started realizing the more I knew about this was so much different than what like my friends knew and my family knew. And then I started catching on a little bit more in my own opinion about how the Fed's monetary policy worked. That's when I started diving into research through their speeches and trying to understand monetary policy through their own communications, which is really difficult. Like, I mean, literally, I would take speeches like this And I would read them over and over and over again for like weeks. And like I have kind of like a reading disability. It's much better now than it had been. But like I can read for about 5 to 10 minutes and then my mind starts to wander. So I could only take in 5 to 10 minutes at a time. So I'd read this little bit and then I would sit there and think about that all day long. Like that little tiny bit that I had read. Try to, maybe read the footnotes to try and understand what it is that they were communicating inside of this little section. Once I felt that I got that part, I would move on. And I would do this all day, like with all kinds of speeches. Sometimes it would take me 2 weeks to get through one. Right? But after I started realizing that if you listen to the Fed's communications enough, that what they are communicating to each other is different from what's being communicated on the mainstream media. There is no other place that it is talked about except for their own words to each other in the mainstream media. And then you have all the other economists out there who are discussing what they feel is their appropriate research to position themselves with, which, is probably fairly accurate for most of them out there. But then when you think about it, none of them really are discussing anything that I have talked about, which I don't get why, because the research that I am doing is only in one place. It's at the Federal Reserve within their own documents and their own words. So when I hear all these people come up with like this, Fed doesn't see anything other than a 2% target, I'm like, how old are you? Like, you must have been learning that stuff way back in the day, right? And still stuck on it in your old Economics 101 class or something, because that's not the way that the Fed conducts themselves. So either you're stuck in an old school way of thinking, or you're purposefully spreading the gaslighting misinformation. One of the two, right? Because what you're saying isn't right. All right. UE, what was your first YouTube video? My first YouTube video for the channel, or my first YouTube video ever? Let's see here. I had some old YouTube channel where I had done some videos talking about a lumber company that I was working for that was shutting down. That was the first channel that I ever had. I think I had one before that, but then I kind of abandoned it right away. But that channel was probably the first one, and I think I was probably doing something with chickens. I don't know. I liked playing. I had a pretty heavy chicken. I had a pretty heavy chicken addiction, I mean, there was a time when I had 32 laying hens, and I would process meat birds either once or twice a month, and we would either do them in batches of 25 or 50. So we would raise meat birds and process them just about well, there was a time there we were doing them every Thursday. We were processing birds. So we had a pretty heavy chicken hobby farm production thing going. Anyway, so that was probably my first video. And then here on the channel, it was an introductory video. It's still posted. I would have been completely lost watching your content just 5-6 years ago. Now I can often predict what you will say before you even say it. Understanding economic takes time and dedication. Well, thank you, Reserve Currency. Man, I really appreciate it. And yeah, like you probably have heard me repeat myself over and over again on this channel. But again, like when we break down the information that we are now getting in real time, but we can see how the credible threat theory works, knowing that they have a credible threat that they are using, the forward guidance, the signaling, how it is that they developed this over the time, over the last 20 years. We've like, once you see it, you can't unsee it. It's just like, it's kind of clear. All right, many have called for recession, but that hasn't happened. Demand for treasuries is crazy high. GDP grew at 3.8% in Q3. Many on YouTube are unwilling to admit predictions of a recession have been wrong. Well, beloved, what is it? Beloved sandworm? All right. Well, I mean, it's true. I think a lot of people were predicting a recession. Like, I mean, I been sticking to my guns on it, on what I believe as far as the recession, and that we have already been bailed out of the recession, and that we are experiencing a recessionless recession. And this is something that I have been saying for like 4 years now, that, well, not 4 years, but like 2 or 3 or something. And I don't know, like I never once ever really thought that we were going into a recession at any given time that was going to be so severe that it would create the environment in which that people would experience the pain of a recession, mainly losing your job to, like a lot of people lost their job, but we haven't experienced the high levels of unemployment that you would typically associate with the recession. And then the other part is corporations getting bailed out. But we know now that corporations, a lot of them, the viable ones, are sitting on a butt ton of cash that they took out during the low interest rate environment and have been sitting on that cash waiting to deploy during, the downturns or whatever problems they have. And a lot of that deploying of that cash is going to go into stock buyback, which may prevent the stock from actually falling. So are we going to see a recession? Maybe not. Right? We very well could not see one. Like, I mean, that could be a very real possibility. Everybody else who was predicting one probably made a bunch of money off of their videos because it's a nice fear mongering tactic. And I would love to do that. I would love to like scare the hell out of everybody to make some money at it, but I got to be truthful and honest with what it is that I am saying out here, true to my beliefs and my research and understanding. And I have been saying that for a while. We are going to experience the recessionless recession, and that so far has played out. Right? Will it in the future? I don't know. Like it very well could be that we run into a severe recession and that we no longer have the recessionless recession. But at this point, this is what we're experiencing, very much in line with what I had predicted. And that people will get laid off from their high tech jobs and have to go take work over at the service industries. That's true. Right? Corporations aren't getting bailed out because they're sitting on cash. And the ones that are failing are probably zombie corporations that should have failed anyway. So again, all lining up with what it is that I thought was going to happen. The Federal Reserve was going to raise rates and knock the heads off the zombie corporations. The malinvestments, the bad corporations that shouldn't exist out there right now anyway, are going to close down. Those people get laid off and go to work at the service industry. That's what's happening. Yeah. Uh, the upper class does most of the spending. They like spenders. I got laid off, dude. It happens. I mean, right? I'm prepared for like the idea of it. Like if I get laid off, I mean, I know what I'm going to be ended up doing. I mean, I don't anticipate that to happen, but if like it's occurred to me that it could happen and I've been in that position before, so it's not like it would be unexpected. Yeah. All right, when does the recessionless recession end though, especially if they haven't cut rates? Well, if it's recessionless recession, can it actually end if it never began? All right. Well, if we're at highs, then expect a pullback within the Fed. Moral of the story, don't be predictable. It makes a day or two of pumping first, but then you get a long drop. If it was easy, everyone would do it, right? They keep the zombie companies going, but they don't. See, that's what I laugh about. Like the idea behind it is that you're seeing corporations failing like mad. Their bankruptcies are like happening everywhere. They're not saving those companies. They're failing. Right? People say they're saving the zombies. They're not. Right? They created the zombies a while back. They were feeding the zombies, right? Extra low interest rates. That created a zombie nation. But then they raised the rates and they kept them elevated and they're going to keep them elevated and they're knocking the heads off the zombie corporations. And they're failing. And it's like, yeah, like not surprised. All right. All right. You're expecting the Fed to raise stocks are posting new highs in September. I hope you don't actually trade stocks. Uh, side here. The Fed would want high. The Fed would want highs when they raise, so they have cushion. With the Fed rate cuts, we will see inflation go up. Why would they? Okay, let me ask you something. Chop. I don't know your name. Um, let's see. Inflation would go up. Would they then hike the rates again, or would the year-end review by the Fed conclude that we have high inflation regardless, no way to control? Let me ask you something. If they lower rates just a little bit right now, they're still going to be far above the neutral rate, which is restrictive to the economy. So that shouldn't really create an inflationary scenario, because really low interest rate environment didn't create an inflationary scenario. So if you had zero interest rate policy that was running for a decade that failed to produce inflation, and now here you have elevated inflation, which is supposed to bring or elevated interest rates, which is going to bring inflation down, and you drop interest rates just a little bit, that's somehow going to create an inflationary scenario when a low zero interest rate environment failed to produce inflation? Like, I mean, I don't know if you really like, I'm not trying to like knock your understanding of the Federal Reserve or anything, but I don't think you quite get it, right? The Federal Reserve is not going to create an inflationary scenario by lowering interest rates even a little bit. In fact, they couldn't even bring an inflationary scenario by taking interest rates to zero, right? If zero interest rate policy created inflation, we would have experienced that after the great financial crisis, which we did not. In fact, the problem that they were facing was an inflation expectation that was persistently too low, even though they had quadrupled the balance sheet. So, like, the Federal Reserve lowering interest rates is not going to be inflationary. The people's expectations of it might be stimulative, but it's not going to be inflationary. The only way that we had the inflation that we had experienced during the pandemic was because of severe supply chain breakdown. Money printer go burr had a lot to do with the expectations of it, but the reality of the shortages and the supply demand imbalances came from the lockdown. It didn't come from the money printing. And I know that's going to be very difficult for most people to deal with, or even, like, they're going to argue with me about that. But most people who will argue that do not have any understanding or excuse for why it is that lumber went from its all-time high of 1700 back to its normal price of 500 per thousand that we had experienced years before the pandemic. And it happened quite quickly, before the Fed even did any kind of real quantitative tightening. And since most people can't explain that stuff, right, it makes it, they're very confused about what's going on within the Federal Reserve, their monetary policy, and how the economy is functioning and how inflation really works. Right? So again, like, the idea that they're going to lower rates is somehow going to create an inflationary scenario. That as far as like the possibility is so far in the back of my mind. As far as lowering rates causing inflation, that is so far at the back of my mind as far as what's going to happen within the economy and monetary policy, that I don't consider that, like, at all. And and I think a lot of people might find that to be humorous, or maybe, like, illogical or something like that. Whatever, man. I mean, I've been studying this stuff for 20 years now, and if lowering interest rates was going to be an inflationary scenario, we would have experienced that of a decade of zero interest rate policy, which didn't do it. So yeah, I can say no, it doesn't create inflation. uh, I would use my energy figuring a way to make more and spend less. That's the only way you can really do it. Yeah. The U.S. is not the same position as other countries due to our reserve currency privilege. Absolutely, you're right. We are ready to abandon this beast system. We can build a better world. I don't know, Mary. Okay, Merriman, let's do it. Let's do it, man. I'm down. I got gold. I got a little bit of gold. I got some silver. I got Bitcoin. I mean, I got some skills. Let's figure this out, man. I can do it. I'm down for it. I don't know what you're gonna do, man. I don't know what kind of system that we can do that's any better, because I don't have any expectations that there's gonna be anything that's better than what we have, right? I mean, could it be worse? Sure, right? I mean, but I mean, as far as better, I don't know what better would be. It's like that doesn't make any sense to me to make a better system. It's just the system that it is, and we have to participate in it the best that we can. And we can take advantage of it if we understand it, just the same as everybody else who's taken advantage of the system themselves. So, do some people have better advantage over it than others? Sure, but it's not like we don't have our opportunity to do it too. So, what is it that, I mean, if there's a better system out there, I'm down for it. Let's do it. But I mean, that's fantasy land. I'm going to deal with the system that we have because this is the reality of the situation. So, I don't think it's a bad system. I don't think it's a good system. I just think it's a system that we have to deal with, and that's it. Let's cruise down here. Currency is debt. Oh, yeah. First things first, we outlaw usury. All right. Our current system would be better had I invested in dividend stocks earlier in life. Yeah, I agree. Yeah, I agree, man. I wish I had done that myself. Here I am, 40 years old, trying to figure out how it is that I can build up a portfolio that's going to provide me with an or sustain a standard of living for myself. I have no idea what it is that I need to do that, but I'm going to try. I'm going to try and buy some stuff. I'm going to buy stocks, dividend paying stocks. I'm going to try and, accumulate rental properties if I can do that. I'm going to do my best to get in that, position of being the property owner capitalist, and maybe one day be able to hand generational wealth off to my kids. That's what I'm trying for. And this is also why a long term so this is why a long term so important. I have more money today than yesterday, no matter what the inflation is. The national debt is what's owed to the public from the government. Could always be worse, but also we have a technology to not have to waste time at useless jobs. God bless you. Do you have to run as fast as you can to stay in place where I come from? You have to run as fast as you can to stay in place where I come from. Yeah. 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 That's just fortunate consequences of where you're at, man. I mean, the thing is like most people. Again, we were thinking about the block of money flowing to them. Most people think that they have to work hard in order to get the money. Like if they didn't work hard for it, then somehow they shouldn't have it. And I know I was like feeling that way myself. Like if it comes easy, it isn't right. But money really is a lot easier than most people think it is. And it's just another tool out there, just like anything else. It's meant to change goods and services to other goods and services. So if you're providing something useful to the people naturally want to be part of that value, and you can take advantage of that. Just bring value to the world. Now, a lot of times people don't realize the value that they have. Like literally, I don't have anything to bring to the world. They say that, and they show up every day and bust their ass for their employer, and then at home wondering what it is that they have for value, right? And that's like, thinking, well, you just demonstrated 8 hours of it, so right, maybe you should take advantage of that time for yourself and do things for yourself instead of for your employer. And now it isn't easy at first because you don't know what you're doing, and so you don't think you're making any money at it, even if you're only making $1. You spend all day trying to figure it out, and you earned $1, and you're thinking, man, what a waste of time. It's not. What you did is you learned how to make $1, right? And once you learn how to make $1, you can learn how to make $2, and then $4, and $8, and 16, and so on. And then next thing you know, you're making a lot of money. But it needs to be built just like anything else. And where you're from, if you have to run as hard as you can just to stay still, well, then you have to look around and say, why am I running so hard for this? Maybe I should be running harder for that. Right? Maybe it is that I need to start putting things in a way that I build it up so that I have advantages that other people don't see. Right? Sitting around waiting for that to happen, you will wait forever. There's nobody coming. There is nobody coming. Bro, you are on your own, period. Okay? There's not a politician out there. There's not anybody. There's nobody. None. So you have to figure it out. The expectation that somebody's showing up or that there's going to be a leader or that there's going to be a way, that's not going to happen. You're going to sit around waiting forever. All right, Dano 454. Thank you so much for being a member of the channel for 7 months. All right. And that's business, not government, and government has been subverted by the overclass. It's odds we blame. The only tool we have to temper their excess. You know, like, it's easy. You know, if you don't want all these people to have all that money, if you don't want the government to exist, if you don't want that financial system to exist and all that other stuff, take all your money out of the bank. Take all your money out of the bank, dump it into Bitcoin and silver, and be out of fiat currency altogether. Don't take out debt. No debts whatsoever. None. Right? No debts. Can't really even own property because you'd end up paying taxes to the government because you don't want to participate in any of that stuff. So, I mean, if you really want to crash the system, just don't participate. Get out. Right? And convince everybody else to get out too, because the moment that you get out, it's going to make it easier for everybody else to get in, and that's exactly what they're going to do. So this is survival of the fittest. It isn't like fair. It ain't going to be fair. There's no fairness to this. It's absolutely unfair. Figure it out, right? You got to figure out that it is unfair, that it's not going to be right. It's going to be survival of the fittest. And if you don't do something about it, you're going to sit around waiting for somebody to change the ways of the world, and it'll never happen. So we're animals. Yeah, I guess essentially, yeah, we are. I still don't think you blame the right folks for the problems that we have right now. Why? Why blame? Like, what am I going to do? Hey, you're the reason why I am in the situation I am in. It's your fault. Do something about it. What are they going to do? What are they going to do? Like, okay, it's your fault, yo. You put the hole in the boat. We're sinking. It's your fault. What are you going to do? Are you going to continue to blame those people? Hey, it's your fault, bro. You did this. You put this hole in this boat. We're sinking. We're all going to die. It's your fault. Now what? We blamed them. We blamed the right people. Now what are you going to do? You're going to sink in this boat, or are you going to bail the sucker out? All right? I mean, that dude did it right there. We blaming him. We're not blaming the right people. I was blaming that guy. You're right. He's not the one who did it. It's that dude. We blaming him now. Not this guy. We're blaming the right guy. He put the hole in the boat. Now what are we going to do? We're going to sink and die because, well, it didn't matter who we blamed. You know, we could blame that guy or this guy. It doesn't matter. We're still going to sink and die because that's what we're doing. We're pushing blame around. Oh, wait a minute. We shouldn't be blaming. We should be doing something, right? We should be actually participating in doing something. Get the hole. There's a hole in the boat. We need to bail the boat out. We need to fix the hole. We need to do something in here. But blame is not it. All right? We can blame whoever we want. And like, actually, when you get back to shore, then you can blame anybody you want because you're okay, right? You're all going to survive. You're, good. You're drinking beers. You're talking about how it is that you worked hard to get the boat bailed out. And now we can go ahead and, pick on the guy who put the hole in the boat. We can blame him because now is the appropriate time to do that because everything is cool. We no longer have to worry about dying in this boat. We can throw the blame around to whoever we want because it doesn't really matter at that point. Blaming doesn't matter. It doesn't matter who we blame. It doesn't matter whose fault it is. All right? We are sitting here in this boat with a hole in it and it's sinking. Okay. We better do something about this. All right? And blame isn't it. Yes, I think we should all say I'm mad as hell and I'm not going to take this anymore. Okay, then don't, man. Then don't take it. Like, I'm not mad as hell. I see what's going on out there. I see money flies all over the place, and I see that I could take my opportunity to reach out there and grab a little bit of it when I can. And I don't think it's a hard thing to do. I think it's something that takes time. It takes, consistency. You have to build it up, and it isn't easy, right? But it isn't that hard either if you're committed to the outcome, especially if you're enjoying the process. All of it's actually pretty easy. There's nothing really to it. Yeah. Now, there was a time in my life that I did blame people. I said, man, I'm mad as hell and I ain't going to take it anymore. And I'm not going to use a cell phone and I'm not going to be having a bank account. And I'm not going to do all this other stuff. And guess what? My life sucked. It was horrible. There wasn't nothing good about it. And I was very depressed. So go ahead and live that life, man. I did it. I know what it's like. It ain't fun. Right? But once you change it around, he's like, okay, I'm not going to blame anybody. I'm not going to blame anybody anymore. The only person I can blame is me for not doing something about it, for not giving a different meaning and actually stepping up and saying, okay, I'm no longer going to be stagnant. I'm going to be active. And I'm going to chase the excellence. I'm going to find what it is that I need to do in my life in order to get the things that I need for my family, for myself, for the future. Right? I can't sit around blaming other people for that. I can't. Like, I don't even know who I would blame, man. Who am I going to blame for me not putting out effort? Who do I blame for that? I don't know who I blame. I can't blame anybody. I can't blame somebody else for me not putting out effort. And if I put out effort that doesn't seem to be rewarded, then that's me not taking the meaning right. What is it that I'm doing with this effort? Am I trying to provide value to the world? Am I doing it only so that I could get value back out of it? I mean, think about it. If I was doing these videos only so I could try and get the money out of it, then I would be doing the sponsorship kind of stuff. I would be pushing all kinds of things that would try and get me to have more money coming through on it. That's not what my intentions are, right? The money flows naturally because of it. And I think that if everybody was to take the consideration of that, in which that if I go and provide value to this world, then the natural results of that is money flow or abundance or just whatever. It just happens to come to you. Maybe it's not money, maybe it's something else. Right? But, to sit around and go, no, man, I'm mad as hell at the way that, the way that people put this hole in this boat, and I'm going to be pissed about that until something is done about it. Okie dokie. And good luck with that. Okay, so what will fix the problem, EU? What will fix the problem? What problem? See, again, you think that there's a problem. I don't have a problem. I don't have a problem to fix. Right? Like, I mean, to fix a problem, you would have to actually acknowledge that you have a problem. My problem was alcohol. My problem was being in debt. My problem was the way I was thinking. My problem were all those things that I have hopefully overcome. I don't experience those problems anymore. What I experience is like opportunity. What I experience is, the things that I want to do in life. Like, I don't experience problems. I don't understand what the problem would be. People were like, man, how do we fix the problem? I'm like, well, what problem do you have? Why aren't you working? Right? Why aren't you chasing excellence? Why aren't you building up a stock portfolio? Why aren't you building a business? Why aren't you doing those things? I mean, is it because you feel like it's unfair to be doing that inside of this economy and you don't want to put your efforts towards it and screw them kind of attitude? I mean, is that what it is? I'm not going to put my efforts towards building a business, towards doing all this other stuff so that other people can reap the benefits of all that. I'm not going to participate in that. Like, you're expecting to be like rewarded for that in some way? I mean, I guess I don't know how to. I mean, I don't expect to be rewarded for doing something like that. I expect to be rewarded for pursuing excellence. I expect to be rewarded for providing value. And I don't even expect to be rewarded from it. It just happens to be the natural thing that occurs because what I am doing, I don't expect to be rewarded for it to begin with. That's not why I'm doing it. I'm doing it because I enjoy it. That's it, period. Do something that you enjoy that brings value to the world, and guess what, man? You'll have it coming back towards you. All right. We're going to have to move on to something else. They're deplorable. All right. Um, all right. Four brews is fine. All right. I say it. Oppression, apples, no problem, have sir. Cool. Only way to cause change is immense amounts of capital in the right hands. The 25% inflation per year problem, good lord. Well, I mean, you know what, deplorable, you're screwed, bro. It's an unfortunate situation for you, man. I just don't know what to tell you. You got to give up. You're done, man. It's just like there's no hope for you. That's really what it is, man. I mean, I'm sorry to say it, but you're right, man. I look out at this situation and what's going on within the economy and what I have going on in my life and some of the things that you had just mentioned within the comment section there. I've come to the conclusion that, you know what, you're screwed. You are. I mean, everybody else got a chance because they actually believe in themselves and stuff, but I don't think you do. Right? I think that you are convinced yourself that this world is going to be a horrible place that is not going to be of any benefit to anybody out there without some sort of external changes that is going to take place. And since that's the case, I think you're screwed. I mean, I'm just being honest with you, bro. I mean, you keep asking, and so I mean, I tried to tell you, but now I think it's just the cold hard truth that that's what you need is that you have conditioned your mindset to now deny you the ability to actually have any kind of real success in your life, literally holding yourself back. I think that's the case. Yeah. Sorry to tell you. Uh, and I mean, I was trying to be cool the whole time, but I mean, I apparently you just needed that, you just needed the cold hard truth of it, instead of just dancing around the question, I guess. All right. All right. Future outlook of U.S. Treasury bonds, safe or no one knows at this point. The future of U.S. bonds is 100% safe. Zero doubt in my mind, every bond will be paid. No doubt in my mind, right? Because we have a printing press that can pay it. So there's zero chance of default. None. Now, the chances that the payments that those bonds, like the coupon payments or the principal, the after getting paid, get the return on the bond, right? The purchasing power may not be there, right? That very well could be lost. But the bond itself will not default. Like there's no way. It just can't. I mean, it just simply can't fault. It can't default. And so, that part I'm not concerned about at all. But the purchasing power of the default, like the non-default, but the purchased or the paying bond, that part of it very well could lose its ability. So if that's the case, then it would, if even though it didn't fail to pay, what it does pay fails in itself, then it's kind of like a default on its own. Yeah. So if that's the case, then that would be different. Uh, if we had massive growth, we would pay down the debt. Long-term debt is big issue, but right now there's still huge demand for dollars. Uh, Thank you so much, Rusty Dollar, for the $4.99. Wish you well. Well, thank you so much, Rusty Dollar. I appreciate the $4.99 and the super chat and the support. Pristine collateral. What jobs? Money spent. Well, my good sir. Thank you. Yeah, appreciate you guys. Musical chairs. Yeah. Thanks, Rusty. Yeah, thank you, All Nighter. Oh, deplorable. You just now figured that out, man. Yeah. The kid bagging groceries today was making $12 an hour, like WTF. Treasuries will also stage a brief pullback, then the dollars and treasury become the only two safe havens. The dollar DXY is now closer to long-term bottom. I made 5. Fiat money. Tony, the way to create new jobs in the U.S. is to accept the idea of green jobs, clean energy as the future of replacing dirty jobs. The propaganda prevents many understanding and accepting new ideas. I think you're wrong, Tony. I think you're wrong. I don't think that you can bring manufacturing jobs back to the United States in a meaningful way. I think you can bring some back, right? You can bring some stuff here, but even the innovation of green jobs and green technology is not going to have the need for massive amounts of labor, as AI technologies is really going to be replacing the need for having physical people there to do the job. So now, when I think about the green movement, and just like in the industry that I'm in myself, right? I'm in the building industry, the building supply industry, and I think about what it is that the green technology is going to do to the building industry within itself, and it's going to diminish jobs, not increase them. It's going to take a new way of building, which through the cross laminated timber industry, which is something I feel very much is on the horizon. And they're going to take the need for construction workers and pretty much eliminate them. They won't need them anymore because there won't be fabrication on site anymore. It'll be fabrication at a warehouse or a facility, and then pieces brought to the location and literally dropped into place. There won't be fabrication on site. You won't need carpenters, you won't need construction workers. You'll just need some people there to basically put the pieces into place, and that's it. And I can't imagine the diminishment of jobs and job opportunity that will be very present within that new green movement. Right? It's not going to create jobs; it's going to eliminate them. That's not a way of bringing jobs back. There is no bringing jobs back to the United States. There's no good manufacturing jobs coming here because we have too high of a standard of living. And if there's anybody out there in the world who can produce it the same that we can, or just slightly less better and sell it way cheaper, then they're the ones who are going to be the competition that we have to go against, and there's no way we can compete against that. It's just not going to happen. Joe, clean energy, green energy is sheer fantasy. It's awesome seeing some of the EV makers now on the brink of bankruptcy. The real market's speaking loudly and clearly about green energy. Yeah, and I agree. Like, I'm not one who's a fan of the whole green energy thing. It was a movement out there, and I see people taking advantage of the idea and stuff like that. Whatever. Like, I think about if you truly believe in being a steward of this earth, and that you are going to have as little of a impact from this moment on, your like carbon footprint, so to speak, right? The pollution that you are emitting out there to the world, right? What it is that you are doing with your daily life. When I think about, if you are truly an environmentalist and you truly care about this planet and you truly want to do something about it, then what you would do is you would drive an old vehicle like I have. You would drive that S10 over there, or maybe that Toyota Corolla that I got. And the reason why you would be driving that is because the amount of carbon and pollution and issues that that vehicle is going to create going into the future is absolutely insignificant to that of what it is to build an EV vehicle today. There's very little that I can do that's going to be any more damaging to the earth with those vehicles than what somebody is going to do damaging the earth by buying a new one. I am an environmentalist. I actually care about this planet. I do care. Okay? But everybody else who is just like, oh man, I need my new fancy ride and I need all this stuff, they hate the earth. They hate this planet. They want to see it destroyed. In fact, they're doing things that actively destroy the planet. I do things that help preserve the planet. So I don't get mad at people when they're like, "Hey, man, EV is good for the environment, all this other stuff." I'm like, "Hey, good for you, man. I drive a little shitty running S10 that probably smokes and people are thinking is polluting the world, and it has far less damage to the environment than any new vehicle is doing today by producing them." So you really want to save the planet? Go drive old vehicles. Tune them up, make them run good, and drive those things around. They have very little damaging impact comparatively to what a new vehicle is going to do. So, again, if you truly cared about the planet, just saying, if you truly cared and that was the reason why you're buying an EV, then you wouldn't buy the EV because that's polluting, and you would go and buy a little piece of crap S10 for $1,200. Stewart Cash like they do in Cuba. If you cared about the environment, you would drive an old Dodge with a Cummins with biodiesel. Yeah, even more so, right? Even more so, right there, Big Hill. Like I agree. If you were burning biodiesel in an old Dodge, man, how little of an environmental impact does that vehicle really have? Very little. Like all the damage has already been done. Like there is no future impact because of that vehicle being on the road. It's done its thing. Now it can travel, it can do all kinds of stuff and provide value to this world without creating any kind of issues or less issues going into the future like an EV would do. Did I get all this? Let me double check here. Yeah, I did. Okay. All right. Also, the slavery involved in those electric car batteries. Oh yeah, well, I mean, guys, I don't like there's slavery and everything, and I did feel like horrible about the slavery that happens in the world. But to be honest with you, what are you gonna do? Like, I enjoy chocolate. Right? I like chocolate. I understand that most of the chocolate comes from slave labor. But what am I gonna do? Not eat chocolate? I mean, I guess I could eat that Tony's chocolate or whatever it is. It says it doesn't come from slave labor, and they brag it up that they're like the one that few that doesn't. What are you gonna do, man? Like, you're gonna not drive your car. You're gonna not eat chocolate. You're not gonna, do some of the things because of the slave labor that exists in the entire world. I mean, hell, I feel bad about that stuff. I don't want it to exist, but again, like, I don't know what you're gonna do to prevent that from occurring. Go live like Amish people do or something, and don't participate in purchasing of anything that's outside of what it is that you can do. All right. The satanic demonic makes a big stink about global warming, yet most of our exported energy goes to China, the world's biggest raper of Mother Nature. Oh, China. I see. It's getting late, guys. All right. I want to get a Fairphone 5. Been putting it off. I love chocolate. I drive around a big smoking dually for smiles. Isn't most labor slave labor? Probably. Alrighty, guys, we're at it. What is it? 150, an hour and 52 minutes into it, 183 people watching with 184 likes. I love it when we got more likes and we have people watching. That's always pretty cool to see. So thank you very much for hitting that like button while you're in the live stream and joining in this comment section. So I really appreciate it. Not sure how much farther we're gonna go. What time is it? 7:06. John Kerry flies in a plane because it's the only way people like him to travel. All right, my labor is free. My labor is a free man's labor. Huh. All right, he could make the changes to the economy. All righty, guys, this was fun hanging out, talking economics, talking about the Federal Reserve and the inflationary scenario that they were totally looking for, needed, wanted, desired, and got. And now is part of controlling the inflation expectations going into the future is making sure that it's well anchored at 2%, which is obviously communicated through the mainstream media propagandized information, and that the Federal Reserve is really going for an average inflation rate over time, which means that they will have a monetary policy that is appropriate in having inflation that is moderately above 2% for some time. Now, nobody knows exactly what that means because they don't give us a mathematical formula for figuring that out. But as far as what we can tell through their communications, they are succeeding at their goals of getting their ammunition back with the elevated Fed funds rate and what I'm assuming is a rising neutral interest rate, which again will give them the ability to actually stimulate the economy if they are able to drop that Fed funds rate far enough below the neutral rate. All that stuff is very difficult and hard to wrap your head around. However, if you do want to understand this stuff a little better, we do membership only live streams. It costs $1 a month to be a member of the channel. Costs very little to you, but it means everything to me. I put a lot of time, hard work, energy, effort into putting these videos together, coming up with the live streams, to having the conversation, and then, keeping this going through understanding of what it is that we are seeing in the mainstream media when we recognize, hey, here's the credible threats, here's the bullwhip effect, here's, Gresham's law kicking in. We can recognize it and see it for what it really is, and not have to put blame out there, because blame, we already know blame doesn't work. We don't, you can blame anybody you want, but it doesn't fix the hole in the boat, right? We got to figure out what we need to do for ourselves, and that's really what this is all about. All right. They're pissing in the wind until it hits them in the face. It just takes longer than anyone thinks. Your streams are greatly informative. Well, thank you, Billy. I appreciate you, man. All right. Thank you, guys. Thank you so much for those super chats. We got through $32.64 because you guys are always so generous. Thank you, everybody who has been joining the channel, becoming a member. Thank you for following the Amazon affiliate link, right? The Amazon affiliate link to buy Cantillon's essay on economic theory. There is the Amazon affiliate link down in the description, but you do not have to buy the essay off of Amazon. You can get it for free at the Mises Institute. Just punch in Cantillon essay on economic theory. Just punch that into the Google search, and it should pop up right away for you, and you can go and get the PDF for free from the Mises Institute. Chapters 6, 7, and 8. I always try and encourage everybody, if you're not going to read the whole essay, at least read those 3 chapters, 6, 7, and 8 of part 2 of the essay. It's the increase and decrease of money to the state and the further reflections upon that topic. Wow. What an incredible set of literature when you read those 3 chapters. It really explains how the money flows through the state and separates the rich from the poor, and what it is that people should expect when new money comes in, and then what happens when that new money turns off and everybody falls into poverty. So very, very good book. The theories that are expressed within this are very old, right? He talks about horses and wagons. Today we have cell phones and airplanes, but the economic forces that are discussed within that book, within that essay, are still recognizable today. And you can recognize them for yourself if you just go and read the essay and internalize a lot of the information that's within that. So I'm going to leave it at that. Uneducated economist. You guys let me know.